Good morning, this is Ryan Schofield and welcome to another installment in the Trading Success Zone as part of the ETX Capital Traders Workshop. I'm Trade Flow, folks. I'm a trend following trader, so I'm going to be looking at a couple of setups at the moment in markets that are trending. So there are a couple of stocks that I've got on my watch list that I've been looking for entries in, and we'll have a look at those. Now, as a stock trader, there are a couple of things that you need to do. Firstly, you need to always consider the global indices, okay, as well as the index that that stock is situated in. The reason why is because the global indices indicates the flow of money, the global flow of money. Now, it's synonymous with a rising tide. So, for instance, if they're rising tide, the global indices are all going up. Those stocks within those indices will rise with it. So the rising tide floats all boats. Okay, and this is really, really true. Now, what we've got here is we've got the S&P 500, the biggest index on the planet. Okay, now if that's rising, then generally you find there is bullishness on the equity markets. So looking at this, we've got on the weekly chart a market that is definitely increasing in price. You can see it making higher highs and high lows. What we got now is we're coming to some big numbers. Now let's just indicate a couple. 1100, it's a nice big round psychological number. You can see how price has traded around it. 1200, see how we found resistance, we've consolidated at it before the next push higher. Or we've at a big number again, 1300. We're at that number as we speak, okay? We also noticed that price is a little bit extended from these moving averages. So we've pushed on a bit. Now that is quite interesting to note because the price likes to be around its moving averages. So for instance, as it gets extended, it pulls back as it did back here in November last year. So we are quite extended. We're into some overhead resistance. I'm interested now. Okay, so this S&P 500, although it's bullish, it's moving higher, making higher highs, high lows. It is due a pullback. Pullbacks are healthy. Pullbacks allow for a trend to sustain itself and continue in that direction. So having said that, how is that going to influence me? We are in an uptrend, but we're coming into resistance and we do a snapback. Well, that would mean that money will come out of the equity markets. Well, having said that, yes, okay, but as the sentiment still remains bullish, even though we're having a pullback, even though as the markets pull back, there will still be that sentiment around. So good stocks will be bought and money will be flowing into them, okay? Let's look at the daily chart just to get a clearer a view on what's happening. This little consolidation back here is that pullback that occurred on that weekly chart when it was overextended. Okay, and now since then we just had a lovely run up. So this is the daily chart. If pullbacks into the buy zone or in these moving averages sparks the next move back up. Okay, so we are bullish. We are looking to take this higher. One thing I have to point out, the indicators here, MACD and RSI, are starting to look a little bit weak, indicating this trend may be getting a little bit tied. In which case, that would be time for a pullback as well. So that the weekly and the daily looking like they could have a nice little snapback. I'm not saying it's going to happen. Okay, I'm saying most likely what should occur in a natural market that's improving or moving higher, it will have pullbacks to the moving averages. Okay, it's just the nature of price. However, I will still take stocks long if they show me a very good setup. Okay, I'm still looking for potential. Now let's look at the Dow Jones. The Dow Jones 30 Industrial Index. This has some very, very big stocks in it. Okay, so it's a very, very good one to watch as well. Now we can see on this weekly chart we are making higher highs, higher lows. We are also extended from the indicators. We're not so close to this major psychological number of 12,000, which is going to act as some kind of resistance. So we've got a little bit of a way to go before we get there. On the daily chart, same thing as the S&P. We're just pulling back into moving averages and making these next move highs. This is increasing. This is looking good to the upside. We are continuing. These moving averages are just indicating how strong this trend really is. Okay, so there is, for the time being, a overall bullish note on these index futures. Okay, now let's bring it home. Because we're looking at some UK stocks, we want to see what the FTSE looks like. Now, this is the FTSE. Where we are right now at 6,000. We've got another 700 ticks to go before we get to the 2007 highs, folks. That's how good this correction has been. Okay, we've had a very, very good correction. And it's looking really, really healthy. Okay, we had a little bit of a battle with a big number, 6,000, which you can see back here has offered some major resistance in the past. Now we're back at it, and you can see we consolidated there for a little while before starting to break on through. Moving averages are all moving higher. Everything's looking good to the upside. So we are looking for a continuation. Okay, continuation of this trend. So what stocks am I looking at? Well, first one, Premier Oil. Okay, what I'm looking at is looking for flow, for the trend. Okay, and you can see here in the last, well, since last year, July, how this has been flowing up beautifully. We broke through the big number of 2,000, okay, and we was just making high highs, high lows. This candlestick here, you get this big long wick. That was a bad tick. So up here, there was, for some reason, there was a tick at 2044 for some reason, and that's caused this candlestick to register a long wick. It didn't occur. Okay, so this wick would be back down here, so ignore that little spike through. Continuation to the upside, indicators are converging to the upside. Every time we pull back into moving averages, we get a spark back up. Okay, this is looking really, really good. The daily, same thing there, just ignore that spark, please, as I've already explained. But every time we pull back into the moving averages, we just spark a new move up. Now this 2000 level, remember, psychologically, we are looking to find these areas, okay? You can just draw in the big numbers like 1500. Look how price interacted with 1500. Okay, for how long it did. So these big round numbers, these major numbers, are interesting. We need to keep an eye on them. Okay, we broke through it and then we consolidated at it. Small little candlesticks before the next move up. I'm looking to trade this market up. I'm remaining bullish on it. It's looking good. While that trend remains, I'll be trading that trend. I'll be looking for entry to the upside. Okay, right now there isn't one. Okay, let me just delete that line. As you can see, the entry was this morning. Okay, so for this video, we were a few hours too late on giving you an actual trade entry, but this may happen again. Pullbacks into moving averages were met with buying. Now, if you would like to know what my entry and stop was, you need to log into our advanced course to do our education. We teach you how to trade this setup and how to find entry into flowing markets. Okay, it's available to all ETX clients. If you're an ETX client, it's free to join in. So want to come on and learn our strategies to time your entry into flowing markets. What is my other stock? Okay, well, Melrose. Look at this weekly chart. Pulling into moving averages, breakout. Pulling into moving averages, breakout. Looking really, really good to the upside. Okay, the daily chart is where I time my entries. Is looking really nice. Okay, so what we've got is pull back into the moving averages, small little candlestick. Bang, next move up. This one's a few days old, but now waiting for a pullback, and I'll judge just to see how it looks at that current time to find a potential for a buying opportunity. I wouldn't buy now. The reason why I wouldn't buy now is because let me just indicate locations which might be similar. Right there, you wouldn't buy there. You wouldn't buy there because the price has moved away from the moving averages. You expect a pullback or wait for the moving averages to catch up before the next move. Okay, so in other words, you need to time your entry. So right here. Okay, I would like to wait for the 10 and the 20 period moving average to catch up before I time my entry. Okay, again, if you'd like to know how I get in, how I place my entries, my stops, and my targets, log into that advanced course, and we'll show you exactly how we do it. For those of you who like attending seminars, I'd just like to show you a quick seminar we're having this evening. Okay, as you know, ETX Capital and Traders Precision do seminars, live webinars, as well as the advanced course. Well, this evening in London, we are doing a strategy seminar. Okay, it's a 2-hour seminar based on strategy, breakouts, looking for flow, looking to time your entry into the markets very, very well. So come on down. If you would like to join in, call the number 0207 392 1494 and come on down. Okay, all you need to do is register your interest and put your name on the list and come on in. It's a 2-hour thing. We'll look at the markets together. We'll look at the platform. We'll have some snacks, tea and coffee, and soft drinks for you. And if you're not an account holder, you're more than welcome to come on down. Okay, folks. For this week, hopefully you found my my video of use. Keep an eye on these markets as they're trending. Go with that flow until the flow starts to show you signs of weakness. Until next week, folks. Bye bye.